As I'm preparing for the open, I'm looking for unusually good news, I'm looking for unusually bad news, I'm looking for news that changes the fundamentals of a particular company. And so when you do find those stocks, you become a much better trader. When you find a stock that has a true news catalyst in it, a true catalyst in it, a true buy order that comes into the market, a true sell order that comes into the market, you become a much better trader. All your trades start working. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education. All right, so let's do something a little bit different in this exercise. So I want to make a point about how important stock selection is. I was getting ready to do a presentation in Chicago, which I didn't make because of the severe weather we had actually at the beginning of the week, but you were actually helping me prepare for it. And one of the trades that we wanted to talk about was what we're going to talk about in Netflix. And the reason why I was interested in trading Netflix was before the open. Before the open, the news was terrible. Really terrible. And as I'm preparing for the open, I'm looking for unusually good news, I'm looking for unusually bad news, I'm looking for news that changes the fundamentals of a particular company. And so when you do find those stocks, you become a much better trader. When you find a stock that has a true news catalyst in it, a true catalyst in it, a true buy order that comes into the market, a true sell order that comes into the market, you become a much better trader. All your trades start working. Almost like magic. And so, and Justin, you do a really good job of teeing up some of these ideas in the AM meeting. But one of the things that Dr. Steenbarger and I have been talking about, we talk a lot, we email each other back and forth. Guys share their daily report cards with us, and we compare notes about how everybody's doing. And one of the things that he has been stressing to me in his observation that people are doing well, that he's following, and he's the best trading coach in the world, works with some of the biggest traders in the world, and sees traders in lots of different markets and products and different strategies. And what he's noticing is that the people that are doing really well are choosing their stocks well. They're getting in the right stocks. I notice when our guys are doing particularly well, their selectivity is really strong, which is another way of saying they're getting in the right stocks, they're getting in the right trades for them, they're getting in the right trades that fit their cognitive and personality skills. So we talk a lot about having a playbook and understanding what trades that you trade well and trading those trades. But, okay, if you have setups that you really like, but you're in the wrong stocks, you're still not going to trade those setups well. You need this other layer, which is stock selection. You need to really get that right. And so we spent a lot of time during DNA going over stock selection. Steve has an AM meeting. You guys learn how to do it, but it's a skill. We continually work on getting better at our stock selection. The reason why we do that is because it makes you a better trader. The reason why it's so important is because it finds the stocks that are more likely to be directional. It doesn't find the stocks that are going to be directional. That's not the game we play. It finds the stocks that are more likely to be directional. Okay? And if you need for things to be guaranteed, you're in the wrong sport. And if you need for things to be super simple from day one, you're in the wrong game. You need things to be more likely to be directional. And that's all we need. Okay. And so Netflix was something that we were talking about, that we teed up the day of earnings, and then we watched it for a second day trade because in of itself, it had a news release that got us interested. And let's go through that and point that out, and then try and make a broader point as to how we find more stocks like this. Because it's not enough to just understand what setups we trade well. We got to be in the right stocks. So let's see what we got, Greg.
Yeah, right. So this is going to be on Netflix 2 days after the earnings. Second day, earnings missed short. So first off, we got to look at the market, what was actually happening during this time. So this was the week that S&P 500 had just hit over 3,000 for the first time in the future. SPY hit over 300. And then we have this big earnings week. Now we're starting to see these big companies come out with earnings, a lot of mixed bags of what's going on, causing a little bit of indecision in the market, and we see a pullback. It wasn't a giant pullback, but it is a pullback nonetheless, multiple days in the red. That being said, it's all kind of like a consolidation in some way leading up to this end of July possible interest rate cut. And then more specifically for Netflix, if we're looking at all of the FANGs, they've been dragging the entire week, very correlated with the market all week. So when we're looking at this earnings play, we really need to think in a little bit of a broader context when it comes to Netflix, because there's a lot more going on than just a singular earnings report. Now, Netflix is in the digital streaming market, which is going through a large change. I mean, Netflix by itself pretty much upended the entire TV industry. If we look at this chart from Bloomberg, we can see that the number of traditional TV subscribers has plummeted over the last 5 years or so. That being said, and this is all pretty much due to Netflix, but Netflix was pretty much the only player out there. Now, moving forward, we're seeing a lot of more people come about. Amazon Prime Video is getting a lot bigger. Hulu, Disney Plus is coming out. Apple TV Plus. All these big companies are making these very significant plays, all directly competing against Netflix. So now the market has this in mind going into this earnings report. That's something to keep in mind.
One point on that. So the market likes companies that have big market shares.
Exactly.
And then when competition starts to come in, the market gets worried that the market share is going to decline. And if market share declines, generally price of stock declines.
Absolutely. Absolutely. And the other thing is the competition that's coming in, it's not just these random companies. We're seeing huge players come in. We're seeing Disney, possibly one of the most impressive companies in the country, coming in, Apple, NBC. We're seeing really big players come at this market share. So just to give just a little overview of the SPY. So this is the SPY showing you hitting above 300. Seems to be, it's like hitting a peak and then rolls over a little bit. You get this slight little pullback. As for the FANGs, this is just a FANG index showing that there's a direct correlation. They pretty much follow the SPY exactly. So now if we look at the actual fundamentals, as we said, this is a second day, so the market has had a chance to digest the earnings. Netflix gapped down 10% after the earnings on July 17th. Now, the reason for this, it wasn't because of revenue or earnings per share. It was because they were expecting to add 5 million new subscribers, but they only added about 2.7 million.
Whoa.
Yeah.
I did that for effect. Whoa. All right, and so that gets our attention. This is unexpected news. This is unusually bad news. The way that Netflix makes money and the way that it is measured by the street is how many subscribers they have. That is the most important metric for this company. Exactly. So when we learn that their subscriber number is lighter than expected, that's not good. Yeah. When we learn that it's much lighter than expected, that's not good. Yeah. When we're talking about a stock that is elevated in price, that's really not good. But that fact in and of itself, the core of its business is that we sell subscriptions. That core is unexpectedly weaker than the market had expected. Okay, so that, we read that, we're like, whoa, I'm getting really interested. Whoa, I'm getting really interested. Hey, Justin, did you see that? Let's maybe take a look at it. Do you want to check that on Netflix? What do you think? What's our game? We're going to start the game plan, where we might get short, how we might get short. We're going to dust off our playbook for our shorts in Netflix because our thesis is potentially heads lower.
Yeah. So, what was very interesting, too, about this earnings report is I remember when it was first being announced over the squawk that we have, the first things that were announced were the revenue and the earnings per share. And we see that there was a slight increase. Revenue actually grew pretty significantly, and earnings per share, it grew as well. And then that subscription number hit, and the stock just tanked. That was the big thing for everyone to listen to. Now, the reason for this loss was mainly due to a price hike. They raised their subscription prices a little bit at the beginning of the year because of their increasing investment in their own content. And then also they expected more people to jump on with the new content that they were releasing this year. And that being said, so on the day of the actual trade, the RVOL was elevated. So we had a 2.5 RVOL. It's a big mover. On an average day, it moves $10 and the volume over 6 million. So now if we actually look at the daily chart, something that's very interesting is obviously after Christmas Eve, we had a lot of people begin to start buying into the stock market again. We had that big drop off and everyone started buying in. So I put an anchored VWAP in this picture to give you an idea of what the buying in price was ever since that drop. And the reason why I put this in is to show that after people started buying on this run up, once this earnings report came out, now we have a lot of people deep in the red. And now we have a lot of people that have to make a decision. Are they going to sell? Are they going to hold? What are they going to do now? Whether they hold it or sell it or not, they have to make a decision. Or are they going to double down? We don't know.
Let's not gloss over this point.
Yeah.
First, we've got to take a half a step back, and we got to give acknowledgement to our good friend Brian Shannon for his work with Anchored VWAP. All right, so Brian does a great job sharing with the trading community the importance of Anchored VWAP. What I love that you're doing here is that you're not just looking at a chart. You're looking at a chart and you're thinking of how people are positioned based on price. And what you're saying is there's a lot of people positioned offsides. There's a lot of people positioned too long. There's a lot of people who need to trim their positions after this earnings release, or outright sell it, or get interested in even shorting it. Yeah. That's what we're looking for. Okay, so when we're looking at this chart, this is not just a play where we've got an unexpected negative news catalyst. We've also got lots of people off sides who need to come in and sell. Super important.
This is something that's extremely important too, is that so after Netflix releases its earnings, we see that we have this 10% drop, the market goes crazy. But then the day after, so when it actually starts trading on this news, we see a very tight consolidation, relatively, compared to the move it just made. So now we're thinking, we're surprised because we see this 10% drop, but then the market doesn't really move much. So we're kind of expecting a possible explosive move the next day because we have a whole day to gather information, and that's all this was. And it really set up some nice levels. We see the top of this range at like 326, and now we have two big support levels at 322, 320 sort of area. And so now going into the second day, we have really nice areas to make our trades off of and compare price action to.
All right, good. And so when you do a good job with stock selection, you become a much better trader. So this is going to be a second day play that we're going to talk about. We're going to use a resistance level from day one to make a second day play. We've got the setups for second day plays. Okay, it's not just magic that this second day play is going to work better. It's not just that overnight we became much better at second day plays. We picked the right stock with the right catalyst. Okay, and we're going to see the impact of picking the right stock with the right catalyst is going to have on your trading of a second day setup. So let's see what happens.
So just to go briefly over the strategy. So now that it's created this large range, this 320 to 326.
Can't trade above 326 on day one, right?
Exactly.
Very important resistance level. Lots of people digested the earnings report. There's a ceiling that's being put in day one. Important resistance level for us to think about.
Yeah.
Good job identifying that.
Yeah. So that 326 is a huge level. So we're going to see if it can get up to that level, if it can't get up to that level, and if it does get up to that level, what's the price action going to be? Is it going to reject? Is it going to hold? Is it going to pop through? We don't know exactly what it's going to do yet. And then obviously we have the 320, 322 level. Is it going to drive down to that level right off the open and continue plummeting down, or is it going to pop off that level? These are really what we have to start thinking about. And definitely, like I said, we're going to have a little bit of a short bias going in because we have this huge earnings report. And then we're just going to play off the levels from there. And then, of course, since it's a FANG, we have to watch the market. The market is going to be a huge indicator as to what's going to go on. And that's just how we're going to have to play it out.
But we want to find stocks independently weaker or independently stronger than the market. In this case, independently weaker than the market. And so when you've got something truly with a sell order in it, the market could be flat to up, and we could see this still selling off because it's independently weaker than the market. But I love the idea of you looking for other indicators so that maybe you get a little bit more aggressive, you can gauge size, adding, subtracting because of that. Good.
So just to give you an idea of the market on the actual day of the trade, we see right off the bat just straight selling, and it downtrended the entire day. Not really much pops. You see a little bit of a retracement, but really just a complete downtrending sort of day. And just to give us a brief overview of what Netflix looked like, this is just a stock. It popped a little bit in the morning, and then we just see a super downtrend. So now, looking to actually how we should trade this. Right off the bat, the first move, we see aggressive selling right off the start. It's going to be tough to get in on that move unless maybe we're in the pre-market, but we see it drive right down to that support level that we were talking about around 322. Now, right there is when you have to make your first trade decision. You got to watch the price action, see if it's going to break below, and what's exactly going to happen. Doesn't break below. It holds that as clean as you could possibly want for a stock, and then pops right up. And it makes this explosive move from 322 up to 326, and now we really have our interest because that 326 level is the level it had no interest in trading above the day before. So this is what we're really looking to watch right now. So immediately we see it touch 326, not even get quite there, around like the 325.80s, and the selling picks up immediately. Now we have to start thinking, about a short. And it kind of gifted us a little bit because after it had this strong sell down, we get a little bit of a pop of a lower high, and this is really when you can start getting aggressive. You see this lower high after rejecting a huge level that we just talked about, and that's where you're entering in on your position. It lets you know that drive really wasn't a true drive, because if it was, it would have broke through that 326 or at least would have held there. So after we enter in our position on that lower high, you get short, you risk against the lower high that was just made, or risk against 326, and we just watch the trade go. So the first place that I'm looking to take off, though, we're looking at our support levels that we just talked about. It bounced off that 322, and we're looking at that 322 to 320 area. You definitely want to start trimming your position a little bit there, see how it trades. Now, after it hits this like around 320 area and you cover a little bit, you know that this stock is such a big fundamental catalyst, you don't want to trim the whole thing. You got to let some run. So after you see this little bit of a bounce, you're mindful of the area where you got in, you're mindful of VWAP, and once it hits VWAP, you got to make a decision. You got to say, is it too late now? Is it too overextended? Is there any more room to run? And that's your decision to make, but it completely fails off of VWAP, doesn't ever really make a break above, and we see it continue to plummet down. Now, for the rest of the day, after it makes that fail off of VWAP, very clean, and then we hit our next trade decision. The next trade decision is at 320. It hits that 320 area again, and now we got to start. Definitely want to maybe take some off, cover some a little bit, considering it just popped off there before. But When it breaks through, now you got to make your decision. Do you want to add on? The next support level isn't until 300. So now the stock can really run.
All right, I just want to make a point. And this gets back to what I said before.
Right.
So our short against day one resistance, how's that trade going to work out?
Against day one, very well.
Okay, our short into day one resistance, we've got a playbook for that. How's that going to work out? Really well. Our lower high against day one resistance that you point out, how's that going to work out?
Well.
Our short into the retracement into VWAP, how's that going to work out? Our trade decision when it gets below the low, how's that going to work out? To short more? Pretty, I would swear here, pretty good, as Larry David would say. Pretty good. Okay? They're all going to work.
Yeah.
We could make up some trades.
Yeah.
Okay? Fade scalps would work. Scalps would work. Come up with a different name for a trade on the short side. Okay? The Greg Smithtown special short. That's going to work too. Okay? The pizza short, the chicken wing short, you know, the reverse pivot underneath the MACD will work. They all work. The crossing of the lines and the above the lines, below the lines, talk about the crossing indicators. Those crossing indicators, they all work too. Make up the indicators.
Yeah.
All right, the reason why they work is because you picked a good stock.
Right.
Some are going to say, well, the market sold off. The market didn't sell off anywhere. Go check to see how much the market sold off relative to this stock.
Right.
It helped, but it was stock selection that really helps here. There are people that need to get out of this particular trade. Okay, so I made a swing trade in this. I shorted into 306. I shorted into day one resistance towards that 326. And then I swung it out overnight. I didn't cover it because it was still trading off really well. And then on day two, when it stopped going down, made a higher low, and then got above the first consolidation area around 11-ish that next day. I got out of my position and so swung it for a day and a half or so. That trade worked.
Right.
Stock selection.
Definitely.
We were talking today in Snap. Our longs in Snap, how'd they do? They all worked. Okay, the consolidation patterns in Snap worked. The buying into VWAP worked. The break of consolidation worked. The morning drive worked. The swing trade worked. I swung Snap day one of earnings and got out of it today when it got below 1765. Okay, that worked. Stock selection. They crushed it. You did a good job of teeing this up, Justin. Really unusual positive news in the number of users using their platform. Really unusual, unexpected. You're dusting off the longs. They all worked. Stock selection. And so, this is, we don't want to walk away from this and say, wow, I'm such a great trader. Wow, I'm so smart. Wow. Yeah, you are. I'm sure that's true. But it was our stock selection.
Yeah, for sure.
Okay.
For sure. So
Let's not even review the trades. Go back to the other chart. Stock selection. Your trade reviews are going to be great when you pick the right stocks. And just to highlight, it's not enough to have a playbook. It's not enough to have that playbook meet your cognitive and personality strengths. You got to pick the right stocks to trade. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.